Welcome, ladies and gentlemen, to Commodity TV and the Mining Newsflash today with Fiore Gold, Karora Resources, Adventus Mining and Whistler Silver. Fiore Gold announced preliminary production results for the second quarter of 2021, ended at 31st March from the Pan open pit mine in Nevada. The Q2 gold production was 10,915 ounces, up 19% from the previous quarter, as heap leach pH values improved during the quarter. Gold sales were almost 10,900 ounces at an average of $1,770 per ounce. The project expansion of the Pan heap leach pad is progressing well. First ore is expected to be placed on the new portion of the pad in the third quarter of the fiscal year. Following the completion of the Goldrock PEA, resource expansion, metallurgical and geotechnical drilling is being undertaken to support a feasibility study for Goldrock. Drill results showed a very good 45.7 meters at over 2 grams gold per ton and 42.7 meters at 1.17 grams gold per ton. Cash as of 31st March is a solid $17.5 million, despite investing in the expansion of the Pan heap leach pad to extend mine life, as well as ongoing drilling and feasibility studies to advance Goldrock. A new discovery of oxide gold mineralization was made on Jasperoid Creek, approximately 1.4 kilometers north of the current Goldrock PEA open pit. This bodes well for further future resource growth from the land package. We expect further drill results in the summer, and the feasibility study should be completed in the first quarter of 2022. Production start for Goldrock can be targeted for early 2024. The progress shown on Pan and also Goldrock should then double gold production from Nevada to hopefully 100,000 ounces gold. Fiore is significantly undervalued, and we give the stock an initial price target of $2 Canadian. Karora Resources produced just over 24,694 ounces of gold in Q1 2021 from their Beta Hunt and Higginsville mines in Western Australia. Gold sales were a very solid 25,547 ounces of gold. Gold production in the first quarter is in line with the consolidated production guidance for 2021 of 105,000 to 115,000 ounces. Karora expects increasing gold grades during 2021 as mining of higher grade material will begin in new mining areas in the Higginsville Central area and the expected start of mining at the high-grade Spargos open pit project by mid-year. As a result, gold production and grades will be higher in the second half of 2021 than in the first half of the year. For the full year 2021, AIC are expected to be between $985 and $1,085 per ounce. Knowing the top team around CEO Paul Hewitt, this is likely to be a rather conservative forecast. Karora's cash and cash equivalents stand at a very healthy $76.7 million per March 31st. Planned capital investments in the first quarter included major development work related to the preparation of new mining areas at Higginsville Central, as well as the gradual replacement and expansion of the mining equipment fleet, which had a very positive impact on productivity and mining rates in 2020. The company also continued its aggressive $20 million Australian drilling and exploration program at all three operations. They are in very good shape and have no debt. Following the payment of the final tranche of $2.5 million to Maverix Metals, the royalty transaction is completed. This massively reduces royalty payments on Beta Hunt, lowers costs and opens up tremendous exploration opportunities such as the higher-grade Larkin Zone, the significant extension to Western Flanks North, the high-grade Nickel Trough 33 and the recently announced very high-grade Nickel Zone Gamma 50C. Karora is growing and thriving, and we are also very bullish on the share price with a 2-year price target of $11 Canadian. Adventus Mining again announced very good infill results from the El Domo deposit. A real highlight was Curie 369 with over 42.5 meters at 3.26% copper equivalent, including 5.29 meters for 17.5% copper equivalent. Another hole hit almost 3 meters with almost 6.5% copper equivalent, and Curie 370 intersected 2.74 meters for over 31% copper equivalent. Adventus is consistently producing great results, and we think the new resource estimate and feasibility study will be very good this year. Adventus has a first price target of $2.5 Canadian with us. Whistler Silver lands more bullseye. Just 300 meters south of Napoleon, they hit almost 4.5 meters with 2,758 grams silver equivalent per ton, doubling the strike length drilled. Another hole showed 861 grams silver equivalent over almost 2 meters true width. The company now has high-grade drill results for 570 meters of the 2.5 kilometer strike at Napoleon. With 4 active drill rigs, this vein is growing into a substantial area of mineralization, but is only one vein in a whole vein field. The Napoleon vein forms the initial body of mineralization that will be the platform for the company's transition from explorer to producer. With the option on the El Coco mill, production ramp-up can be fast-tracked. Studies on metallurgy, engineering, mill upgrades and tailings reprocessing options have been initiated to move quickly into production. Whistler's share price does not yet reflect the big upside, and we give an initial target price of approximately 4 to 5 Canadian dollars. My team and or myself are or may be shareholders in the companies presented, and they are or may become part of the SRC Mining Special Situation Certificate. Thanks for watching us, and bye-bye from Switzerland.